Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. We are up over 1 million views, and that is thanks to you. Thank you for sharing this channel. I'm honored to be doing it. I've also joined the team over at the Rule Classroom, so I'm flattered and honored there as well. I'll be interviewing Rick 1 to 2 times a month, asking your questions. It'll be live, so you can ask him in real time. And Albert, in his technical prowess, is going to be able to stream the video over to YouTube here. So that is very cool. I'll be pulling the questions from the Rule Classroom. So if you want to take your investment career and education to the next level, head over there. There's a link in the pinned comment below. Thank you guys for always being here. Alrighty, let's go to the charts. Starting out as always with the S&P 500. Okay, so we have dropped down. It is down 1%, possibly a topping pattern here. So it moved through the 10 moving average, the 20 moving average, moved through the 50 and closed below it on Thursday and then bounced right back up. So it looks like it's going to be obeying this 50 moving average. Next level down is going to be 5,300 right at the 100 moving average. Looking to me like we're going to get a bounce here. Technicals got sold off a bit, got down to 39, not low like we'd want, below 30. But yeah, I would expect a little bounce here and then probably roll over just a little bit more. The dollar was flat for the week, came down to the 400, popped up, hitting on the 200 and closed just below it. 200 is starting to slope down. So I think now if the dollar gets above 106 from here on out, or at least here in the next 6 months or so, I would be really surprised. I think that was probably the high, and the dollar's generally going to be moving down, pushing the commodities up. Yields are still climbing, looking like our 200-day moving average on this one is playing out. And if we move out here in the long term, once we get above this zero line here, when both the 10 and the 2 pays the same yield, if we have a spike here, that's when we get inflation. So we're still in clown world, looking to move back into normal times. 1 month treasuries still paying north of 5%. So I think we're really close to a recession here. If you want to wonder how to play a market crash, which I think is coming in the S&P sooner rather than later, you can check out Lobo's free market crash survival kit. I'll put a link down below. Honestly, I think there's probably no time better than now. If you don't have a plan of what to do when your stocks get hit 30 or 50%, I would start with that. Gold is down 0.75%, closed the week at 23.81. It was at 23.99 last week. Still think we got some good support here at 2300, although this is kind of high technicals. Wouldn't surprise me at all if we broke through 23. Next level after that is going to be 2200 if it breaks, which would line up nicely with the 200-day moving average. And gold divided by the S&P 500, exactly the same as last week. 0.436 shares of the S&P 500 will buy you 1 ounce of gold, is starting to slope up a little bit here. So that means that generally speaking, gold is outperforming the S&P 500 and has been for the last couple of weeks. And GDX divided by gold. So just like what Rick talked about, the miners are starting to outperform the metal. That's been happening, and it's been happening since late February. The miners are doing better than gold itself, although they're both going up. Miners are going up faster. Here's a tick if you want it. CEF is down 1.7% for the week. You got another chance here. So we had this limit order hit back here for 2180. Had another one right here, right on the 100 moving average. Silver got whacked this week, so this one is about half silver. And so this one got hit quite a bit more. So opportunity there if you want some physical, I'm doing air quotes, physical gold and silver in the stock market. GDX is down 2.5% for the week, and I still see support around where we are now. Maybe now it's like 35.50 or so, right on this 50 moving average. And then I like the support down here around 33, And if gold really gets washed out, maybe we'll get down to the 200 moving average, which is sloping up now, which is good. And that'll be about 32. GDXJ down 3.2%. And we are, hitting right on the 50 moving average right there. I'd say support is closer to like 42. That would put it along the 100 moving average. But technicals are still middle of the road. I wouldn't want to be betting these gold stocks yet. We'll get into some that are getting washed out. But I don't really see any entries there. Same with Franco, Nevada. I want to see this get down a little bit. I still really like the entry around like 115. 200 moving average is sloping down. Technicals are all kind of middle of the road. You know, if you don't have any, then maybe a limit order up a little bit higher than 115, like 118, 120 or so. But best gold royalty company on the planet, should be in everyone's gold portfolio, in my opinion. Wheaton Precious Metals down 3%. This is at a heck of a run, probably a little overvalued here, but you know, I've got dividends going back here, going to years, so I'm not going to mess that up. The dividends are increasing about 10% per year. Don't see any entries here. High technicals. We want to see this get sold off a little bit. Maybe we'll get lucky and gold will go down to 2,200, and then this will get washed out pretty well. And especially, this is really leveraged to silver, actually. So if silver takes a big hit, then this one should as well. And I think there is some downside here coming for silver. All right, and Gold Royalty Corporation. So down 4.25% for the week. We talked last week about Adriatic metals. Mining is hard and governments don't make it easy. The nice thing about this, I guess, I'm trying to turn a frown upside down. So basically the copper asset that we're going to be streaming from here, they're running out of a place to put the tailings. They need to clear some lumber or clear some timberland and to start a new expanded tailings. And the government said you can't do that anymore. So they only got a few months left before we stop getting a paycheck from this. I think Adriatic Metals is in a lot worse shape than Gold Royalty, but yeah, we got a stream on this and debt, so that's not fantastic. Metalla Royalty is down 5.5% for the week. Nice little tick down here at 275 if you could catch it, but it is below the 200 moving average. If you believe in this company, I think now is a pretty good entry point, maybe 270 or so as a limit order stink bid. EMX is down 5% for the week. This is actually looking really good here. Okay, so technicals are getting not quite where we want them at. RSI is at 39. We want it in the 30s, but look at where the 200 moving average is. This could be considered a, I guess this would be a triple bottom here. So we got one here, two there, and then the third one right there. I mean, a limit order $1.75, like we've been saying, now is probably fine, but maybe I'm just being cheap. The one thing that has me nervous is you see this little gap right here. Usually gaps get filled. So, you know, maybe this does have some downside risk here down to the next level of support, which would be about $1.60. Orogen Royalties down 5% for the week. I drew this little trend line here, semi-accurate. I mean, we got 1, 2, 3, 4, 5, if you want to count those days right there. And now we're coming up again. I don't think Orogen's a bad buy, although I don't like the technicals here. Yeah, top pick by Adrian Day. Rick Rule loves it. Interviewed the CEO. This place is, you know, they do have the only one income stream, and a lot of this value here is tied up in the Merlin deposit, which they're just drilling out right now. So your value is in gold in the ground. But you know, had a heck of a run. I think it's got more to go. Barrick Gold is down 3% for the week. Still like limit orders around, you know, 1625, 1650 in that range. 200 moving average is starting to angle up. I think we got some more downside here because RSI is at 50. You know, 1650 looks pretty good to me there. Like this one a lot. And Newmont down 0.5%. Let's see, last week I said the resistance is now, and it shot up a little bit. Yeah, limit orders around like 43 or so. They had an earnings call that was actually a surprise to the upside, but with as much as gold has run since the last quarter, I really expected this to do better. And the day the earnings came out, it actually fell. And I think everyone else did as well. So a little disappointing. That's kind of a bummer. But, you know, this is one of the three majors in the sector. So I think if you're going to be betting on gold, you know, Barrick, Newmont, and Agnico Eagle. Agnico Eagle down 1%. Support is around, I still see, I mean, you got a little bit right here around $70, but the support I like is 64 to 65 down here. 50 moving average is going to be around $69, but technicals are still pretty stretched. B2 Gold, same kind of thing. RSI 53. It is bouncing right here on the 200 moving average, which is finally leveled out. So remember, we were talking about 250 back here and back here. If you didn't get in on those ones, I would be waiting for a little bit more of a pullback, a little bit better of a technical entry. See, we can even run a retracement right here. And you can see it's just starting to hit on the top end, the 50% of the Fibonacci. If it hits down here on the 50, that would be around $2.80. That looks like it might be a nice entry and probably what would iron out to be a golden cross. G Mining Ventures down 10% for the week. I could probably take this away. So we all know that it got 4 for 1 with the Oko West acquisition from Reunion. I don't see any technicals here. We're going to have to wait. Once they do these re-ratings, then you got to wait a while for these technicals to catch up. If there's a better way of doing it, I'm all ears. And Chris says, Steve, you're like the Energizer Bunny, still catching up on all your fantastic interviews from the symposium. Thank you, Chris. Wish I could have made it down there. Great interview with Rick in the Rule Classroom. Rule Classroom, thanks for the shout out. Tons of good info there with the ratings. Have you ever tried an interview with David Erfel, the junior mining junkie? Yes, I reached out to him. He's coming on the show in September after the conference. There's a junior mining conference, I think, in Beaver Creek, and he's going to be going to that. So we'll pick his brain when he gets back from that. So thank you for recommending that, Chris. We have him in the pipeline. And silver is down 4.5% for the week. Now, some interesting things here. Okay, so we blew through that 29 and 30 that we were just hoping for. That little white line we drew didn't mean squat. We closed the week at $28.02. I really do see some downside here to like 26.50, possibly even 26. This is looking kind of bearish. RSI is getting sold off, which is nice, down to 35. I think if we get to that 26.50, it'll probably be in the high 29s, and that will be the time that the banks go long, and so can we. Gold divided by silver shot up. Not fantastic for the silver sector. It closed the week at 85 to 1. That's up from 82 to 1 last week. Now, this is what's interesting here. SILJ only lost 2% for the week, whereas the metal itself lost 4.5%. So less than half of that. This is good for the silver equities. So pretty excited about that. I still like a order down here around like 11 and a quarter, $11 for SILJ. Unless it plays catch up on Monday and Tuesday, this is looking really good for the silver equities. Pan American Silver, still a stronghold, down 4.5% for the week. Still like the support at 1950, just lining up with a whole bunch of support right back here. SILV, Silvercrest Metals, sold a little bit more of our position week before last. Silver took a bit of a hit, but you know, this one was flat for the week, so equities are holding up. Endeavor Silver, this one actually lost more than silver itself. It lost 5.25%. Still like support back here, 350. Same thing. I mean, maybe a starter up here at $4 at the 50 moving average, but yeah, I think 350 is the level. And copper, paging Dr. Copper, down 2.5% for the week. Now the 425 level that we drew in back here, that broke. Almost came down and touched $4, settled the week at $4.12. Interesting here, the RSI is pretty sold off, got down to 30 on Thursday, hitting on the 200 moving average. So I'd like to see a setup of like a double bottom here. If we go into recession, copper's probably going to get whacked, but kind of compelling. The one that's really compelling and a lot easier to bet on is COPX, the Global Copper Miners ETF. coming right into this 42 line that we've had drawn for, I don't know, months, and actually touched it. So if you wanted a starter position into COPX, that's around the time to do it, around 42 bucks. Look at all this back support that it's lining up against. I like that entry level a lot. We have a gap back here that may get filled, but you know, compelling on the technicals. COPJ down 1%. I would expect this one to play a little catch up next week. But again, first level support here. And on top of that, look at this. We got 1, 2, triple bottom right there. Thursday was the day to catch it. Technicals got lowish. They're at 37 RSI and MACD and stochastic following. But yeah, first entry level here. If you want some junior copper miners, $21. Then after that, $19.50. And Arizona Metals down 3% for the week, lining up with a lot of back support right here. So $1.37 doesn't look bad. I'm probably going to do one last buy on this one, and I think I'll probably try to catch $1.25 if it ever gets there. We'll see. And speaking of which, we've got Peter Granich coming on the show next week. So go to the community tab and under posts, and you'll see submit questions for Peter Granich. Put all your questions there, and we can get an update on Arizona Metals as well. Mundoro Capital down 9% for the week. Just interviewed Teo Deshev, the CEO of this company. Like this one a lot. We will see, you know, kind of waiting on drill holes, see what BHP drills up, and see the value of this thing get re-rated overnight. But super small market cap, limit orders only, let the price come to you. Uranium down 2% for the week. We're at 82.35. We just had Justin Hune on the show. I will put a link to that episode right up here. Be sure to check that out. Check out his newsletter, 500% portfolio returns in 5 years. There's a link down below in the notes. Now, one thing we talked about and is pretty compelling, we've got, I'll call it a quadruple bottom, 4 bottoms here. Hit right there, March 13th, came back again and hit it June 11th, then hit it again at June 25th, and hit it again on Thursday. Okay, I think this is the floor. There is some downside risk down here, technically, down to like 74 bucks. I don't think it'll get there. I think basically what's happened, especially after talking with Justin, is that a lot of these guys are scrambling to get all their paperwork in for this Russian waivers, and a lot of them are on vacation. You know, it's summertime. They're spending time with families, and these nuclear power plants have 2 or 3 years worth of fuel on site. They don't have to buy right now, you know, but when they come back from vacation, when they're done with all those waivers and they know what playbook they have to play with and what their contracts going out look like, I think they're going to start buying. And I think that buying is going to start happening, and probably in the next 3 to 4 weeks. So this being down here, take a look at the RSI down here, 24 it got on Thursday. And then if we go to the Sprott Physical Uranium Trust, made another purchase on Monday, $18.20. At the time, I think it was a 12% discount. And right back here on Thursday was a tick if you could catch it. I missed it, but it was at a 16% discount. You could have got it for less than $17. After that, I put in a limit order for 17 bucks. Maybe we get a double bottom. We shall see. One thing I got to note, remember we drew this bear flag a long time ago and said there's a risk of it coming down. Might be another one here that I missed to point out the other week, and another possible bear flag right here, which doesn't do us a whole lot of good because it already broke out. But it's a pattern nonetheless. I like patterns. So we'll see what this irons out. We got the 400 to catch it, and just the fundamentals that I described. I think this is a screaming deal. And when you see a discount like 16% like that, that's my favorite kind of money. That is what I like to call free money. Cameco is down 3% for the week. We had 50 bucks drawn in here for a while. I think in 2 years, that's going to be an amazing bet, but now you can get it even cheaper at 45. The one thing I don't like is it's down below the 200 moving average, although the RSI is pretty low. It's 45. So a lot of these uranium equities now are getting pretty cheap, which means I'm getting interested. Kazatomprom down 3% for the week. And let's see, we had this line for 38.50. I think that's a decent level for Kazatomprom, although now it's even cheaper, 37. Donna was asking about where to buy it. Interactive Brokers is the only way I know for Americans. If you guys know another way to buy Kazatomprom that's not Interactive Brokers, put it down in the comments below for Americans. Donna, thank you for the donation. You mentioned that you're just getting started in investing and like where to start. Personally, I'd start with a book. It's a quick read. I learned a lot in it. I really like the history of money. I learned a lot in that. It's an easy read. If you're just getting started in uranium, honestly, I probably wouldn't do Kazatomprom. I would do URNM because this one is looking even better on the charts. And as far as sell-offs, you know, we wrote $50 was a good deal, and now it's sitting at $45.50. Yeah, I like this one a lot. Look at the RSI is down there around in the high 20s, low 30s. And on top of that, 15% of this bet is Kazatomprom. So if something happens with Kazatomprom, you only lose 15% of your bet, not 100. You know, Kazatomprom's a pretty risky bet. There's some risk there with jurisdictions, and you know the state owns 75% of the company. It's you know, whereas URNM, 15 cents out of every dollar goes to Kazatomprom, and the rest is spread out. I think this is a much easier place to start. Joe agrees. He says something similar. I've avoided Cameco and Kazatomprom. Also, URNM has slugs of both. Yeah, and he has a separate position in SRUUF. He says, now that most uranium equities have dropped 15 to 30%, I look to add URNM while keeping others. I agree. I'm choosing to do URNJ, which is a little more risky. We've got, you know, I placed some bets last week on this one. Cheapest I got it at was $21.50. Thought the deal was $25, but it got even cheaper. Lining up with a little bit of back support and great technicals here. Low RSI, got into the low 30s. I like this one a lot. URA, I skipped over it there just as far as, where are we? Losing my place in line here. All right, URA is down 2% for the week. Support was at 27.50, but it blew through that for a hot minute on Thursday and then bounced back up. I think once these utilities come back in and start buying the physical uranium, a lot of these equities are going to play catch up. Not a big fan of URA, although I do have it and have owned it for years. I much rather play URNM and URNJ. All right, and URNJ divided by URNM has underperformed by about 1% for the week, but this is just a general trend that we're playing here. You know, for over a year, this thing has just been gradually moving up, and I think when we get towards this green line here, these are buying opportunities in the juniors. URNJ divided by Cameco, Kazatomprom, and Sprott Physical Uranium Trust combined. Same thing, general trend line. Once it gets down here, that means the juniors are cheaper in relation to the majors in the metal itself. Uranium Royalty Corporation. Okay, we drew this circle back here, and I think we can basically move it over here. Pretty compelling buying point. You know, you can get it as cheap as $2.20 last week. I think that's a deal. I might actually be buying more of this. And Energy Fuels down 1% for the week. Yeah, wrote $5.50 last week. Think the same thing. You know, $5 and $5.50, maybe $5.25, $5.50, somewhere in that range. Looks pretty good. Uranium Energy Corporation down 2% for the week. We had our Scott Melby interview. That one's out. Be sure to check it out. Coming up on a little bit of a kind of a dirty triple bottom right here for Uranium Energy Corporation. RSI isn't quite where we want it yet. I would look for it to get scooped up by this 400 moving average. And crude oil down 2% for the week. Man, there's like nothing up. Crude oil down 2% for the week. I drew this little Fibonacci here, kind of hitting in that zone. Underneath the 200 moving average now, not fantastic. Looks like technicals could send it down a little bit more next week. Gold divided by crude oil is, let's see, last week it was 30.5 to 1. This week it's 30.8 to 1. So that means gold has outperformed oil about 1% this week. So gold outperforming oil. XLE, our favorite oil ETF, So these are just what your dividend will be if you, or thereabouts, if you buy in around these points. And, you know, a buy now and then a buy down here at 88 and then another buy down here at 86. And this is the increasing dividends that you'll get. This is our stink bid down here for north of 3.5% dividend. XOM, ExxonMobil, up 1% for the week. Well, there's our up. Oil was down 2% and Exxon was up. That's pretty cool. Like, kind of looking like a bear flag. So hoping this will come back down. Really hoping it will come back down. Rick gave this a 3 a little while ago. So I should probably just buy more. I have so much Exxon though. I don't really need any more, but I would love to see it get sold off and get even cheaper. 200 moving average is around 109, but technicals are kind of stretched. It's tough for me even knowing it's a deal to buy when the technicals are like that. Chevron, tick if you could catch it, last week down 1% for the week. Set a limit order around 152, looked really good. Never quite got there, got to like 153 something, but just hit right on the 200 moving average there and then bounced right up. So that was a tick if you could catch it on Wednesday. Blackstone Minerals is getting pretty cheap. This one is down 2.5% for the week. Almost got to 15, got down to 15.15. Remember here, your dividend is going to be about 9.7% at this price point. If it gets down to 15 bucks, that's a 10% dividend. Freehold royalties, kind of expensive when you look at the $13.50 line we've had drawn forever. I would just wait for it to come back down and touch it again, which it almost inevitably will. Woodside Energy lost 8% last week. I've got a buddy that follows this company, and he says with the dividends, if you basically just get in this thing and have a 5-year time frame, you are going to be doing backflips a few years from now. I don't know if that's enough to make me want to buy more, but they do have really good dividends. I got to say that. I got this for free with the BHP acquisition. That's when the volume all ticked up here. But yeah, a little disappointing on the share performance of this one. But as far as an entry, technically, this is looking kind of compelling. I mean, we've got, you know, just a baseline of support down here around $17.70, pretty much where it is now, and RSI is at 32. So if I didn't own so much of this, I might be inclined to get a little bit more. Petrobras down 3% for the week. I drew in this quick little Fibonacci. I'm not sure how much this really matters. RSI is at 39, not really where we want it to make an entry, but if this came in for a double bottom, that might be a little compelling. And if you want to try out this software, TradingView, free for 30 days, there's 3 levels to it. I've got the middle level, although someone just told me that the advanced level was only like an extra 30 cents a month or something. So if that was available when I got it, I probably would have just done it. But I love this software. I like that you guys are using it too, because you're putting in the comments and sending me emails of setups that you see. So I appreciate that. Thank you. There's a link down below. You can check it out for free for a month and see if you like it. If not, there's no commitment to buy. Natural gas is down 6% for the week. Drew a Fibonacci in here and it just missed, although it did come in for a little double bottom. RSI is 34, so pretty well sold off. Gap back here that will probably get filled, so we may get down into the 175 again. We'll see. Devon Energy flat for the week. Possible another bear flag right here. I drew this through the closing prices, so it's not perfect, but it gives you an idea. Kind of looks like a hockey stick or putter there, huh? But could get a break to the downside, which would be very welcomed because I'd like to get more of this company. But I think at levels we're at now, this is a good deal. Just the TA in me underneath the 200 moving average right here. It's just kind of, I don't know. I should probably just buy more. Equitable. Okay, kind of in this little triangle-ish pattern here. Maybe we can adjust that slightly there, although this kind of negates that. Looks like it might be breaking down, although RSI is 27. I mean, if you want one right there, they're just paying a dividend right now that they announced. Dividend's not fantastic. I think it's like 1.5 or 2%. Here, I could just tell you. Earnings, dividend, 1.8%. But coming up on some back support right here. An entry now, I don't think is terrible. I mean, we got low RSI. We had earnings that just came out. Surprise to the upside. Dividend just paid, which to pay that dividend, they got to pull it from somewhere. So the share price usually gets cheaper. If you want more Equitable, honestly, now that I'm looking at this, this is looking pretty darn close. There is a little bit of a risk that it could come back down here into the even lower 30s, but I think now it's decent. And Birchcliff got added this one to the list. T, Brad, Bella are all talking about Birchcliff and Peyto. So I got our starter position here in Birchcliff at, what was that, $4 and just south of $4.50. Closed the week at $4.28. So we got our next limit order in down here for $4. Also looks like a bit of a bear flag, kind of seeing a pattern form here, right? Technicals, stochastic, RSI, and MACD don't look great. They're all kind of middle of the road. So I would expect this to fall down and get a little bit cheaper. And these were our corresponding dividend yields if you get them at those prices. Peyto, same thing, got a starter position in that one. This one's up 3% for the week. And then also put a limit order back in here for $9.95. So if you got it here around $10.62, which is what I got it, you got a 9% dividend, and 9.6% dividend will come right around $10. And Antonio says, Evolution, Petroleum, and Pinecliff Energy. They're both oil and gas. I just threw them under here under gas. Okay, took a look at these ones real quick. Neither one's diluting or buying back shares. So they're, well, they are, but in microscopic amounts, nothing that's really going to affect this. They both got really nice dividends, but unfortunately they both have a lot of debt. So as far as Evolution Petroleum, 185 million market cap, nice dividends, but I'm not sure they're sustainable. A lot of debt, cash flow kind of is puny lately, to put it nice. The CEO, so this is what we got from Jordan Roosh of Mining Stock Monkey. He looks at what is the CEO's salary and how much shares does he own, and put that into a ratio. And you get if you get a ratio of like, 5 times their annual salary, that's what they own in shares. That's good. If you get, like 1 or 2 times, that's bad. Well, Kelly Lloyd, the CEO of Petroleum, Evolution Petroleum, has an annual compensation package of approximately $2 million. As for shareholding, Lloyd directly owns 1% of the company. Petroleum's shares valued at around $1.85 million. So if his annual salary is $2 million and he owns less than that, less than 1 year's worth, that wouldn't pass Jordan's test. As far as a technical entry here, if you were undeterred, I would say right here on the 50 moving average at $5.50, and then back here maybe around $5. That lines up with some back support. I took this way out, and anyways, around $5 looks like a decent support level. And as far as Pinecliff, all right, 230 million market cap. That's in American, so in Canadian, that would be 333, I think. 313. I don't know, maybe someone can do the math for me here. But basically, they also have nice dividends, although the dividends were halved recently. So they went from 8 cents to 4, and that happened recently. That was just in March of this year. So that should be pause for concern. They also have a lot of debt. And the president and CEO, total annual compensation package of approximately $450,000 a year Canadian. He owns about 3% of the company, which are valued around 10 million Canadian. So that's much better. This guy owns 22% of in shares, or he owns 22 times his annual salary in shares. So he has a very he's very interested in what the share price does here. So that bodes much better. As far as a technical entry, maybe one like 55 cents if we go back here. So maybe 50 and 55 cents. See, that lines up with some technical support here. Again, these are small market cap companies, so I don't know how much the technicals are going to matter here. But this one's kind of cool in that it pays a dividend every month, which has its own unique, kind of thing. Dividend's really good. I think it was 10%, if I'm not mistaken. Oh, no, even better, 11.8. But, you know, is it sustainable with all the debt? And, you know, yeah, not sure. They just have their dividends well. All right, Antonio, hope that helps. If you guys would like to see me review your companies, you can put your companies in a, you get some quick fundamentals in the charts. There's a donation link down below. And thank you to all who have donated. All right, coal. Thermal coal closed the week at 139. Met coal, same thing, closed the week at 234. So had a little bit of sell-off in the coal equities. The coal ETF, there was a tick if you could catch it, got down to like 23.50. I'm not going to get any more unless this starts to get pretty stupid cheap. But yeah, I like seeing a pullback there. And we have about, as far as, let's see, we're down from 11.7 million assets under management last week. This week, it's 11.2. So the 500,000 that we gained the week before last, we just gave back, but we have the same amount of shares. So it makes sense that the share price has retreated. Glencore. All right, we were talking about $11.15. Broke through that on the 200 moving average. We'll see if we get some kind of double bottom right here. I put kind of an idiot alert here at $10.85 is when I'm going to start paying attention to it. But I do like that this gap back here has now been filled. So we'll see if some kind of pattern forms right here, but low RSI, you know, in the low 30s. This is what we're looking for. I think we're anticipating, the market's anticipating possibly some bad earnings calls. Remember, dividend on this thing sucks until they pay off that tech deal. And then after that, it should resume quite nicely. AMR Alpha Metallurgical Resources down 2% for the week. I drew in a little Fibonacci here, but I don't think that really means much. It's just confusing. I think these levels are pretty good. Maybe a limit order down here around 275. And Warrior Met Coal is down 2% for the week. Hit right on the 100 moving average and then bounced up. Real level of support that I see. I mean, did that gap get filled? Yeah, actually the gap did get filled, so that's good. Yeah, maybe it missed just a tiny bit. Yeah, but limit order around 61. If it gets there, I think would be nice. And BTU Peabody, man, I was talking about this option, how I missed it back here, and guess what? I missed it again. So that was cool. Really sweet. But anyway, yeah, that would have been an amazing option. You know, kind of like the Sprott Physical Uranium Trust. I think the idiot-proof way of trading this thing is buying it at $21.50 or 22, and then selling it at like 24. Looks like it's working. And platinum down 3% for the week. Been saying for a while that the support level is 945, and look at this, closed the week at 944, right there, right on the 200 moving average. Unfortunately, closed below it, but keep this in mind when looking at both platinum and palladium. Liking this level a lot. Next level of support is going to be down here around $900. PPLT made a purchase into this one. The reason was from what I just showed right here when I bought it right here on Wednesday. Got this one from Steve Penny and Silver Chartist. He saw the same thing I did. I love that program. There's a link down in the notes below. So placed a bet on platinum. I do have a stop loss, and it's down, I think, right around $84. So made a purchase here, fell down below the 200 moving average. Don't like that. I expected it to take off from here, but it's fallen a little bit. If it gets below 84, then it should initiate a sell. And palladium, same kind of thing. Looking like it's putting in a bottoming pattern here. Level to watch is 860, and it's at 886. So we're almost there. PALL getting close. We've been talking about for months that limit order of like 79 or 80 bucks. Looks like it's going to hit. And SPPP, AMP says, bought more SPPP this morning at $9.32. I think that was a good purchase point. Loaded up in 2 trading accounts with it now and holding tight. Both platinum and palladium are at historical low prices, as you say, especially compared to where gold and silver are. Still thinking the P metals will outperform in the next couple of years. I think so too. I mean, it's very risky. As far as safety, own like gold and then secondary silver. And then if you want to really speculate, get out onto platinum and palladium. But, you know, I mean, if you just kind of draw a line here at like, you know, where we're at now, $9.20, spends a lot more time above that than it does down below it. I like the buy. Platinum divided by silver, not as cheap as it was a couple of weeks ago. 32 ounces of silver for 1 ounce of platinum. Now it's almost 34 ounces, so ticking up. Nickel futures down 3% again. Looking fantastic. Nickel's getting sold off. I hope it gets sold off more. The way we're playing that, NIKL. So our limit order hit down there. I think it was 1260 and dropped even below that. Got down to like $12.10, maybe even just north of that. Low RSI here. RSI at that point was 24. When I got it, it was 30. But yeah, lining up with some back support right back here. This paid like a 19 or 20% dividend last year. So I'm very curious to see what it'll be this year. Centaurus Metals. My money finally cleared in the one brokerage account I can buy this in, and had it in for 24 cents. Got down below that, but the order just never filled. So remember, with these small market cap companies, you know, your order, it may hit in the price range, but it just doesn't trigger. You know, if you don't have, it's like being a little kid and having your dollar and waiting for the ice cream man that never shows up. If nobody's there to sell it to you, then you can't buy it. And that's basically what's happened here. But I'm keeping the limit order for 24 cents. We'll see if it hits next week. That one had a nice little bump of 8%. Iron ore down 1.5% for the week. Closed the week at 106.86. Bets we got on that. This one I'm excited about. BHP had some limit orders hit and just hit some buy orders. Got in there 55.77, 54.96, 54.61. And when I placed the option, the stock price was $54.39. So I took it for $57.50. I think it was going out, till November. So I would love to just see this run up to $57 here in the next couple of days, and then I will exit stage left. But this is the one option I got. I missed the which one was it? It was the coal one. I can't remember. I talked about it. Anyways, Rio Tinto. Tick if you could catch it on, when was that? Tuesday? Yeah, Tuesday. Got down to high 62s. First limit order down here is at 60. I should probably raise that a little bit, maybe bring it up to like 62. It did just have a reversal here. So RSI got down into the 30s. Earnings call is coming up, looking like it's coming up in just a few days. So we'll know more. Looking like the market thinks it's going to be good. So that might have been the bottom. And Nestle, okay, I decided I don't want to follow cocoa and coffee anymore. And Nestle, what I really wanted for this when I had Adrian Day on the show in the end of May and I got it, I really wanted an option on this, and that would have been amazing because it shot up like 10% in a few days. It just caught it at the perfect time, but I don't know if they don't have options for it, but I couldn't find any. And so anyway, so I should have just sold out of here, but I ended up getting out. I think it was about a 6.5% gain, something like that. Looks like perfect timing because it just shot back down to where it was before. If you're looking for an entry into Nestle, this doesn't look like a terrible time to do it. I mean, lining up with some back support right back here, and I didn't pull it up, but coffee and cocoa are still historically high. So nice little setup there if you want it, but I didn't want to have to follow that anymore, so I got out. And Bitcoin, wrapping up with Bitcoin, kind of trading in the box here. It's basically flat for the week. It's at 68,000 at the time of this recording. I would expect it to come up back here, maybe around 72,000 or so, and then we'll kind of see what it does there. But technicals are getting pretty stretched, so I'd look for it to hit like 72,000 and then reverse back down. Alrighty, well, I hope you guys got something out of that. I really love being here. I really love doing this. Thank you for you guys for always being here each and every week. Love you guys. And over 1 million views. That's pretty incredible. I never would have imagined when I started this channel that, hadn't even thought of that. And then when it came up in the analytics, I thought that was pretty cool to share. So thank you guys. Hope to see you over at the Royal Classroom. Links in the pinned comment below. Thank you for always being here. Support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.